Thanks for joining us. Troutman Pepper has been producing podcasts focused on issues that clients face, due to the impacts of COVID-19. Today, we're going to continue with another one of those podcasts, and we're going to focus on the experience of our financial services team and what we've had, experiences we've had counseling financial institutions seeking to form during the pandemic. I'm Zayne Tweed. I'm an attorney on Troutman Pepper's financial services team. To give you some background, I work with public and private financial institutions in all manner of transactions. I've done bank mergers, acquisition of non-bank institutions. I also help state and nationally chartered community banks, as well as non-bank financial companies on various regulatory compliance and corporate governance issues. With me today is James Stevens. He's a partner on our financial services team. James has nearly 20 years of experience representing public and private companies, including banks and neobanks, marketplace lenders, and other fintech and financial services providers. James helps these clients with formation, licensing, program agreements, mergers, acquisitions, debt, equity financing transactions, joint ventures, regulatory reporting and compliance, just about everything. James has significant experience with the formation of new banks, what we call de novos for short, as well as non-bank fintech startups. So today, James and I are going to discuss several de novo bank projects that our teams worked on, and one non-bank fintech startup. And each one of these stories provides insight into how entrepreneurs in the financial institutions industry are dealing with the pandemic. So James, thanks for being here today. As I mentioned, we're here to talk about the challenges that COVID-19 presents for de novo banks and non-bank fintech companies. Could you give us a quick summary roadmap of what we're going to talk about?
Sure. Thanks, Zayne. I appreciate that and appreciate the introduction. It's good to be a part of this today. I thought what we might talk about is we had a few projects that were going as we went into the pandemic, and we had another interesting project that came along sort of midstream. And I thought it would be good to talk about how, each of these things was impacted by COVID kind of in its own way. So first, I thought I would talk about 3 de novo bank projects. So these were projects where there was actually groups of bankers that were seeking to get a charter to form a bank. One of those projects they decided not to go forward. Another one, somehow persevered and raised capital and got through it. And another one really didn't miss a beat. So I thought it would be interesting to talk through, the 3 of those. And then also, we had a really interesting non-bank. It's really more of a neobank, a challenger bank that we helped form during the pandemic. And this one had a really specific mission. Their mission in life is to facilitate banking to underbanked communities, particularly the Black and Latin American communities that have been traditionally overlooked by banks and consumer credit entities. And so, with that mission in mind, and in light of the pandemic and a lot of the other things that have gone on in 2020, that project came out of the ground and is moving along nicely, so that hopefully they'll be up and running early next year.
James, that sounds very interesting. On the off chance that we have people that really don't understand the terms we use, before we get into that discussion, can we build out some of the basics for the listeners? For example, what's a de novo bank? And, what's a de novo bank versus a non-bank fintech? And, either way, what do you as a lawyer do for those types of clients?
Sure. I understand we do speak some jargon, and so let's talk about it. So a de novo is what we really use as shorthand to talk about any new federally regulated, state-regulated financial institution. So whether it be a bank, a savings association, a credit union, and it's one that has just been formed. It's not an acquisition. It's not a recapitalization. It's when a group of organizers form that entity for the first time. And when that's done, the regulators for those entities, all have a period of time at which they treat them as a startup bank, and they're subject to special supervision. So the big challenge in forming a de novo bank is that you need to obtain approval for the charter, either from a state or a federal regulator. And you also have to get approval for deposit insurance. So if it's a bank or savings association, that means getting approval of the FDIC. If it's going to be a credit union, it's the NCUA. a lot of times people ask us, well, how long does that take? And, I guess the way that we shorthand it is we think it takes about 1 year soup to nuts. And that doesn't mean that you're dealing with the regulators for 1 year. That means from, the time that we're having the first meeting where somebody is asking us, how do we do this, to when we're all kind of cracking the champagne of opening day, averages about a year. And so, the reason it's challenging and what we do for these clients as lawyers is we help them through, the chartering process. And so they have to get together a lot of detailed information for the regulators, things like how they're going to meet the convenience and needs of their community. They have to build out a management team and a business plan to serve those communities. And they have to raise the capital from investors to carry out the business plan. And so the two big chunks of work that we do on de novo banks, or really I'll say three big chunks of work, are kind of the formation and approval, the documentation of the employment terms for the officers and the engagement of the directors. And then the last big piece is, doing the capital raise, which, is typically done using a offering document. Contrast that, a non-bank financial fintech company or, fintech company, whatever you want to call it, they're not chartered, with a regulator. They're not, you don't have to get a license typically in order for them to operate. These guys are usually out to, they see something they can improve or disrupt or automate with traditional financial services. And they usually come up, but they have got, a lot of them are consumer oriented, kind of retail facing. They do money transfers. You can use them to deposit checks. They provide bank accounts to the unbanked. You can get a loan from these types of fintech companies. You can get mortgages, almost any kind of loan. Manage your investments, and you do all this typically using an app or a website rather than going into a brick and mortar office. And so for those, we also help them kind of throughout the whole process. So the formation, the capital raising, dealing with those executive employment, corporate governance issues. But for those, sometimes we aren't dealing with getting licenses from the regulators. We're talking about how to navigate around getting licenses. Sometimes they don't have a bunch of policies and procedures, and so we're working with consultants to put those together. And a lot of times when they start up, they don't have to start up with the level of capital that a bank does, and so a lot of times the capital raising for those entities looks a lot more like a tech kind of startup capital raise rather than a big $20-30 million capital raise that a bank would go through. And so it's challenging, but you're dealing normally in an environment without a regulator when you're dealing with the non-bank fintechs.
Well, James, thanks for laying that groundwork. It's a lot to digest, but once you start to understand the terms and how things work, it starts to get a little clearer. So looking at those de novo banks you mentioned earlier, I'm guessing that the business folks started working on the business plan well before COVID hit, and they hadn't planned for a pandemic. Could you give us an overview of how they started and what they were thinking, and then how COVID impacted the launch of the banks? What you saw as not only an attorney but an advisor there to this whole process.
Sure, Zayne. I'd be happy to talk about these three de novo banks. And I guess let me start with the one that really didn't miss a beat. These guys, they started their project in late 2019. We spent a lot of time at the end of last year, the first of this year, helping them, form their organizing group, their board, developing their business plan, coming up with a capital plan. And, we were ready to file the application, right when the shock of the pandemic hit in mid-March. And, we had this sort of one question, do we go ahead and file or do we not file? And so I picked up the phone, I called the regulators, and I said, look, I know you all are not in the office, so what do you want us to do, file or not file? And I'll tell you, the regulators, we've seen this every time we've had a conversation with regulators over the past few years. I mean, they are open for business and anxious to get de novo applications. And so this bank, which was a Georgia bank, the Georgia Department of Banking and Finance and the FDIC, they were more than happy for us to go ahead and file the application. And so that's what we did right in mid-March. And, that process is about a 120-day process. And we thought, well, let's just go ahead and get the application going. and we'll see what happens when we get conditional approval, which is typically when capital gets raised. And it actually worked out. By the time we got conditional approval in the summer, the capital markets had begun to recover, and the bank had to update their financial statements. They had to, build in some new understandings of how the world was going to work into their business plan. But they really didn't miss a beat. And frankly, having the regulatory approval process kind of going through that early pandemic period, March, April, ended up being a pretty good use of time. I had a second group that, punchline is they got opened as well, but their timing was not as good, and it was just where they were in the process. They had been moving along, and they had filed the regulatory application earlier in 2020 before the pandemic hit, and they were poised to launch their stock offering in April of 2020. And so, of course, one thing that we all experienced at that point was there was a complete shutdown of the capital markets, and that caused a timing issue for this bank. We couldn't go out with a capital raise with a document that was, printed with an April, 15th or whatever day it was that we were looking at. There just wasn't anybody out there that was interested in investing anything, much less a startup venture. So we decided to delay the offering a little bit, and that did put some pressure on the bank. They were set to open that summer. They had their IT vendor set up. Moving IT vendors for banks is very difficult. And so, we started to kind of get some pressure where we were running up against timing issues that we couldn't move. And so ultimately they ended up, going out and starting raising the capital probably a little earlier than they wanted, because the capital markets were still, they were not shut down, but they were still anemic. And it did cause them some delays. It did cause them some costs associated with those delays. But they were able to get through it, and they raised their capital. A lot of grit and the hard work went into it, but they raised their capital, and they were able to get open. The last one didn't turn out so well. So this was like literally one of the last things I did before the quarantine hit. And I remember it very specifically. It was Sunday, March the 8th. I went to an outdoor party on the patio of one of the organizers of this bank. We had champagne in our hand. They unveiled the name of the bank. Everybody was very excited about it. We had a great business plan. We had a great group of organizers, great board and officers. And then, right after that, Friday the 13th is when the national emergency was declared, and people started staying home, that next week. After that, the capital market seized up and the stock market swung way down. What also happened, and probably was more consequential for these banks and for all banks, is that the Fed, trying to stave off the recession that was going to come out of this, dramatically cut interest rates. And so, all the financial statements and the business plan and the expectations in terms of net interest margins, loan growth, all that stuff, was going to have to change. And so, this group, they had invested some, but not as much as some of the other groups that I'd mentioned. And so they just decided that, look, this just wasn't the right time. And that project did not make it out of March.
Well, James, I'm glad to hear that it worked out well for two of the banks, and really hope they continue to be successful. It is unfortunate to hear about the one effort that didn't go forward. Maybe they can reorganize, reform, and be successful in another endeavor. I'd like to turn to a little different perspective. Over the course of the pandemic, I've worked on 3 different mergers, 2 on the buy side, 1 on the sell side. In each case, the regulators have asked the parties to provide detailed financial information, corporate governance tactics, and operational management plans that are specifically set up to respond to the pandemic. And these are state regulators as well as federal regulators, the Office of the Comptroller of the Currency and the Federal Reserve. And now, although, in my experience, you typically get information requests on these types of matters from state and federal regulators during the application process, the depth and the detail, and also the number of information requests that came, ad seriatim, from the regulators was greater than normal. And this is the case even for well-managed, well-capitalized banks with good compliance ratings. So I'm wondering, was the regulatory approval process different for de novo bank clients, that don't have a record, like existing banks that are merging? than it otherwise would have been during a regular application process?
Good question. And I think my answer is yes and no. So, one big myth is that in the de novo world, the regulatory environment is different or harder for de novo banks than it was pre-Great Recession. And, we've done 5 de novo banks in the past 18 months here at Troutman, which I think that must be more than any other law firm in the country. And I can tell you that while the regulators will certainly thoroughly scour a de novo bank application, they don't take longer, and it isn't really sort of meaningfully harder or different from how it was pre-recession. More specific to your question, I can't say that the 2 de novo banks that we had going through the regulatory approval process had a different or more challenging process here. The difference was just that in light of the new operating environment they had to go down, the facts just dramatically changed. These banks had to go back and adjust their numbers and their business plan related to their lending expectations, the yields in the new rate environment, what they were going to be paying on deposits. And to the extent that that impacted the capital needs that they had, frankly, the capital needs, were probably less because the growth was going to be less. They might have made some changes related to that. So I won't say it was really harder or different. It's just that they had to take into account the facts as they rapidly changed during 2020, which, at the end of the day may have been better than being a midstream bank that had to sort of deal with the rapidly changing environment. And that might be why you got some more pushback on the bank M&A deals you're working on.
And that's really good to hear. It's almost like, children born during a storm turn out being stronger than ones, born on a sunny day. So now that we've talked about the de novos, can you tell us about your neobank client formed during the pandemic? If you could tell us about the process, what it is for a non-chartered financial entity and how that differs from a traditional chartered de novo bank that's subject to, kind of the regular state and federal regulatory scrutiny. You mentioned that one of your clients has a specific mission, and that's to facilitate credit to underbanked communities, particularly the Black and the Latin American communities that are often overlooked by traditional bank and consumer credit entities. Did that sense of mission help the founders power through the challenges of starting a business during the pandemic, particularly in light of the fact that those 2 communities have borne the brunt on a per capita basis of the pandemic here in the U.S.?
Sure. Yeah, this project is an awesome project, and it grew directly out of both the general increase in the role that we're seeing with challenger banks in our financial services ecosystem, but it was also encouraged specifically during 2020 by the intense focus on Black lives and the systemic discrimination in our country that we've been dealing with, and faced with as a result of the death of George Floyd and a number of other similar tragedies. So one of the many good things that's come out of those tragedies is the rise of this Bank Black movement and the push for all banks to refocus their products and services on African American communities, as well as other minority groups in our country that, as you said, in some instances have been left out of, the traditional banking products and maybe some of the prosperity that the broader country has been enjoying. So with that backdrop, the organizers of this neobank approached us to see if we could help them get started. That was ultimately just, forming an entity, raising some capital. But ultimately what we're helping them with is they will partner with banks that will enable this neobank to offer the planned banking products that it has. So neobanks or challenger banks, whatever you want to call them, are non-bank financial service providers that instead of obtaining a myriad of state money service business licenses, and some do obtain some of those licenses, but typically what they'll do is they partner with one or more of a small cadre of banks and other licensed financial service providers that offer banking as a service. So these banks and other financial service providers, what they do is they partner with neobanks and other fintech companies, and they give them banking services as a service that enables the non-bank to offer all manner of deposit and credit products where the bank is the issuer or the owner of the account, and the non-bank is the originator, product developer, and servicer. I think this group specifically, they are really focused on the product development, making sure that the products are marketed to and are attractive to their target customers. So the big difference between these companies, these non-bank, neobank, challenger banks, and the de novo banks, is that they usually don't have to really obtain any regulatory approval and will have no ongoing regulatory oversight by a state or federal regulator. Instead, they're formed and capitalized like any other fintech company, and then they replace the arduous process of working through their business plan with a regulator, and they switch to a different but equally arduous process of working through partnerships with banks, processors, and other third parties they need to have in place to offer their products and services. So to your point, it's a very difficult way to set up a new business, and it's oftentimes that people starting these organizations are focused on missions that help them have the drive and fortitude to get through it. And I think this project is no exception. Besides just being great business people and good folks, the people behind this neobank are absolutely committed to their mission, and the passion for that mission really permeates everything that they do and that they ask us to do for them. I think they're going to be enormously successful. In fact, they've already enrolled, pre-registered hundreds of thousands of potential customers. And so I think they're going to succeed in their long-term mission to serve the Black and Latin American communities.
Well, James, thanks very much for sharing your experiences with us today. I think, these are all great success stories, and they highlight important issues for others out there who may be thinking about starting a de novo or a fintech, and, they want to know if the challenges that are presented by the pandemic can be overcome. I think you've shown that COVID-19 is not an insurmountable obstacle. Like you said, it just takes grit, extra measure of planning, perseverance, and willingness to adapt. So with that, I'd like to thank our listeners. For more information on the topics we discussed today, or any other financial services topics related to COVID-19, you can visit the Troutman Pepper COVID-19 Resource Center, which is located at covid19.troutman.com. And of course, if we can help you navigate any of these issues that we discussed during the podcast, don't hesitate to reach out to me or James directly. Our contact information is available at troutman.com. And there you can also listen and subscribe to other Troutman Pepper podcasts, wherever you listen to podcasts, including on Apple, Google, and Spotify. So thanks for listening, and stay safe, and let's hope 2021's even better than 2020.
Copyright Troutman Pepper Hamilton Sanders, LLP. These recorded materials are designed for educational purposes only. This podcast is not legal advice and does not create an attorney-client relationship. The views and opinions expressed in this podcast are solely those of the individual participants. Troutman Pepper does not make any representations or warranties, express or implied, regarding the contents of this podcast. Information on previous case results does not guarantee a similar future result. Users of this podcast may save and use the podcast only for personal or other non-commercial educational purposes. No other use, including, without limitation, reproduction, retransmission, or editing of this podcast may be made without the prior written permission of Troutman Pepper. If you have any questions, please contact us at troutman.com.